We are in the midst of a paradigm shift in China's stimulus reaction function. There will be no major credit stimulus. China is not going to bail out the world this time round. To see why there's been this change, we have to go back to 2017, the National Financial Work Conference, where Xi Jinping and Liu He gathered the party's elite, and a consensus was formed for China to focus on sustainable long-term growth. They were not going to use credit to boost GDP at above potential rates. So the key manifestation of this was the crackdown on shadow banking, the deleveraging drive, which really kicked off in 2017 and has weighed on economic growth since then. So Beijing is now accepting slower growth and is less willing to use credit to boost economic activity. Acceptance of slower growth and less reliance on credit to boost economic activity is actually enhanced by the trade war. Beijing views the confrontation with the US as a multi-year, perhaps even multi-decade period of strategic competition. Because of this long-term view, they're unwilling to use credit to boost short-term growth and later on leave themselves vulnerable to future economic or financial sanctions from the US. Moreover, for the first time in 70 years, they have an outside actor they can blame an economic slowdown on. President Trump is the perfect scapegoat for Beijing to use to blame economic mismanagement and the slowdown in Chinese economic activity. China is willing to accept slower growth, but only up to a point. The old constraint of unemployment still holds. So if we get a spike in unemployment, we get protesters in the streets, of course, Beijing will have to step in with a major stimulus. Another trigger, PPI. So PPI is really key leading indicator for industrial profits, which in turn are central for debt repayment. So when PPI is negative, so too is profit growth, and that automatically triggers a great deal of stress for corporate firms and their debt repayments. So if we see PPI at -2% for a sustained period, 3 months or more, we'd expect Beijing to step in to try and boost economic activity and offset the fall in profits and likelihood of debt repayment problems in the industrial sector. The final trigger is sector-specific defaults. So in 2015, we saw huge difficulties in the northeast, the industrial belt, the Rust Belt, China's heavy industry, and they really struggled with low profits. We had a number of defaults there, and that forced Beijing to act with a large credit and infrastructure stimulus. So if we get a similar thing this time round, perhaps in the auto sector, the banks, China would have to step in and really ramp up economic activity. So unemployment, PPI, and sector-specific defaults. Either of these three could trigger a major stimulus response, but at the moment we don't think that's likely.